Hello and welcome to this Forex Preview at xm.com. We'll be discussing the upcoming data out of the US and the outlook for the dollar. I'm Maria Pachordias, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, the US economy seems to be quite resilient at the moment. This week, we'll get the FOMC minutes on Wednesday and Nonfarm payrolls for June on Friday. What are we likely to get from this data, and how might it impact the Fed's rate path?
Hello, Maria. So I'm looking for a minor disappointment in the non-farm payrolls data, and let me explain that. So we've gotten several early indicators so far, such as business surveys from S&P Global, the ISM Manufacturing Index, initial jobless claims, and most of those pointed to some softness in the labor market in June. Nothing dramatic, but just a little bit of a loosening in the labor market. So the official forecasts are for non-farm payrolls to come in at 225,000. That's less than the previous month, still a healthy number though. The unemployment rate is expected to have declined back to 3.6%, and wage growth is anticipated to have cooled slightly in yearly terms. So the forecasts, considering what we've seen from early indicators, the forecasts look a little bit optimistic to me. So I would be looking for a non-farm payrolls number that is a little bit below expectations, but that wouldn't be very tragic in a sense, right? The labor market is still really strong. Even if we miss by a few thousand in non-farm payrolls, that doesn't change the overall picture. So we are going to get more clues around this as the week progresses. On Wednesday, we are going to get the ADP employment report, and then on Thursday, we are going to get the ISM services index, and those will really give us more updates on what to expect from non-farm payrolls.
So turning to the US dollar now, can you tell us why it weakened in June? And what's the short and longer term outlook for the greenback?
Yeah, so the dollar had a relatively difficult month in June, and that's quite strange because the US economy is doing well, right? Economic growth is running around 2%. The housing market has staged a very strong recovery. The jobs market, as we already mentioned, is in good shape, and inflationary pressures have started to cool, but at a slow pace. So the economy looks resilient, and as a result, investors have started to price in this higher for longer scenario for interest rates. The market pricing suggests that the Fed is going to raise interest rates again in September, and a second rate hike beyond that one is seen as a coin toss. But the most important part, the timing of rate cuts has been pushed out into the second half of 2024, and that's a massive rethink around the Fed's path. So recession concerns have gone away. Traders increasingly believe that inflation might prove to be persistent, and that might force the Fed to keep policy tighter for a longer period, and yet the dollar couldn't really capitalize on all of this. Now, why is that? Well, I think it has to do with the strength in the euro and the British pound because of what their central banks have been saying lately. That has almost clipped the dollar's wings. Now, the question is, does this phenomenon persist moving forward? I can make a solid argument that the dollar could have a stronger second half to the year. And the argument is quite simple. The US economy is quite resilient, but that's not really the case in Europe. If we look over in the Eurozone, the economy is already in a minor technical recession. Business surveys suggest that's going to get worse. So ultimately, I think that economic performance is going to matter for the Forex market, and that might be the factor that sort of allows the dollar to make a comeback in the second half of the year.
Marios, thanks so much. And thanks for joining us at xm.com.